Hello all, myself Ms.Mithra.B, Assistant Professor from Department of Commerce, Digital Marketing and Data Mining at Dr. SNS Rajalakshmi College of Arts and Science, Coimbatore. In this lecture video, we are going to saw about IAS 2 inventories. IAS 2. What is mean by IAS 2? Which mean standards for what costs are recognized as inventory cost and when these costs are transferred to the income statement as expenses. This is known as IAS 2. IAS 2 excludes construction work in progress, inventories of financial instruments, and biological inventory assets related to agricultural activity and agricultural product at a point of harvest. This is overview of IAS 2. Next thing is inventories are assets. Sales in the ordinal source of business. In the process of production for such sale or in a form of material or supply to be consumed in the production process or in the rendering of service. The next thing is measured. Inventories are measured at the lower cost and net realization value, which means inventories are measured at LC and NRV. Need to know that what costs are included, what cost formulas are permitted, how net realizable value is determined. These three things are we need to know. The next thing is purchase cost. Purchase price and all costs directly attributable to their acquisition, such as non-refundable taxes, transportation and handling, reducing by volume, discount and rebates. These are the purchase cost. The next thing is conversion cost. Direct labor, indirect variables and fixed production overhead cost and variable production overheads allocate to inventory based on actual usage. Need to production overheads allocate to production based on normal operating capacities. This is known as conversion cost. The next thing is joint product. What is mean by joint product? Allocate between on a rational basis, which means joint product must be allocated in a rational basis, such as relative sales volume of product when they become separable. If minor is value, do not allocate, which means in joint product if minor is value, do not allocate, which means measure byproduct at net realizable value, which mean in joint product byproduct is measured at net realizable value only and deduct this amount from main product cost and always deduct this product only from the main product cost. This is known as joint product methodology. And next thing is other inventoriable cost. What are the other inventoriable cost? Which means limited to cost to bring the inventories to their present location and condition, which means only limited cost is applicable and it only brings inventories to a present location and condition. Example, amortization of capitalized development cost related to inventory. Borrowing cost included if for a qualifying inventory item. If measured at FV or produced in large volume on a repeated basis, borrowing cost may but are not required to be capitalized, which means these are the other inventoriable cost which IAS 2 inventories takes places. As already told, IAS 2 is a standard for what costs are recognized as inventory cost and when these costs are transferred to the income statement as expenses, it is known as IAS 2. And also what are the measures we are going to follow, and what inventories are assets need, and what purchase cost is explaining, and what conversion cost is explaining, and what joint cost overview, and these are the other inventoriable cost we have gone through. Thank you.